It's a rainy morning here in central Illinois, so what a great time to record videos, especially our real estate investor update. I'm Justin Ball, CCIM, and today we're looking at the April 2026 residential market from the investor perspective. We've pulled together the top stories that are shaping how we look at single family and multifamily investment assets in central Illinois right now. Suburban Migration 2.0 is the first story. Bloomberg Wealth tells us that there's a secondary wave of migration towards affordable tech hubs and mid sized cities. And as remote work stabilizes, residential investors are seeing sticky occupancy in markets like Peoria that offer a high quality of life with a low cost of entry and low cost of living, moving capital away from overpriced coastal metros. The spring thaw and inventory is coming. The National Association of Realtors confirms that there's a significant shift and inventory is up year over year. The lock in effect is finally breaking as homeowners, whether those are owned to live in or owned for investment, are starting to accept that there just are not going to be 3.83% interest rates returning. So, this is a really critical window for residential investors to find properties that aren't in bidding wars for owner occupants. We're also seeing good rental demand relative to household formation. So, looking at Realtor.com's latest data, household formation is still outpacing new constructions by a factor of 2 to 1. So, even with higher rates, the demand for quality rental housing remains very robust. And residential rates have climbed another 3.8% nationally this quarter, which we're seeing reflected right here in central Illinois. We're also seeing a greater demand by tenants for energy efficient value adds on properties. So, a new study shows that residential properties with green or energy efficient certifications, or even just components like their HVAC, are fetching a 7% premium for rental rates. So, we're not just looking at things like replacing cabinets or replacing carpet or paint, but when we see serious upgrades like insulation and HVAC and energy efficient appliances, those improvements lower tenant utility costs and they increase the retention of tenants. Next, the federal interest rate outlook. We're seeing from FedWatch that the latest meetings are indicating that we're going to have higher for longer, but stabilization. So, for a residential investment perspective, this predictable interest rate around 6.2%, 6.3% is allowing for more accurate underwriting compared to the volatility we've seen for the past few years. So, you can really know what your investment is going to yield. So, overall, thinking about central Illinois and the residential investment market, our market is shifting towards a more balanced state with some higher inventory, a little bit higher inventory here in the Peoria area, and stabilized, predictable interest rates. So, for investors, this is important because our local price to rent ratios remain some of the strongest in the state and strongest in the country, especially for single family homes in that above 50 but below $150,000 price range. And we're also continuing to see those national trends in rising rents, and Peoria's relative affordability makes it a prime target for that suburban migration we've been talking about that Bloomberg reported on, especially as we think about high yield properties in really saturated zip codes. If you're thinking about investing in any type, residential, commercial, or just looking to buy or sell a home, contact our team, commercialpeoria.com or greaterpeoriahomes.com.